Evening all. I hope you're well. Let's have a look. What I want to do tonight is obviously just a Q&A really. So I've got Theo and David are joining me. If you just want to start just like typing all your questions into the Q&A box, and that'll probably help the flow of tonight. I'd rather kind of make it your sort of questions than mine. So both David and Theo are invested in all sorts of single lets, SAs, HMOs, developments. So anything that you kind of want to ask them, and obviously anything you want to ask me as well, just jump on there. Theo, how are you?
Hi Ryan, how are you doing?
I'm good, mate. I'm good. So yeah, I'm just saying. Obviously, I'm just trying to get these guys to put a load of questions in for us. We'll let a few more people come on, and then we'll get cracking. Really. You all right?
Not bad. How are you?
I'm alright. Been busy.
I was going to say you look very relaxed out there in the garden, enjoying the good weather.
I thought, why not? It's doesn't happen too often, so yeah, I thought, why not? So, but no, I've had a pretty good day. With I might sign a house for us to buy. So.
Okay. Whereabouts?
Yeah,
what are you thinking?
Jasmine.
Oh, okay. So. Lovely, Jasmine.
Yeah, it's a bit of it's a development. Like, I mean, they've lived in it for like 20 years. Davey.
That's what you want.
Yeah, but they want top dollar for it, so it's like.
Oh, the one in a few months.
And then you've got to spend loads of money on it. So.
Yeah.
So.
Hi guys.
Hi Dave.
Are you all right?
How are we doing?
All right. Just I'll let a few more come on, and as I've said for those just joining us, if you just ping all your questions into the Q&A box, and then we'll sort of go through the Q&A or into the chat, wherever you want to put them. If not, obviously try and make it your show as much as anything, and just ask as much as you can.
Beautiful. Where are you? You are, Ryan.
I know, yeah, just sunny Killingworth.
Beautiful, mate.
Too many clouds down in Middlesbrough.
I'm in Gosforth, mate. I'm in Gosforth.
Oh,
we've got the smog down here.
Yeah, I can barely see you, Theo. But it's good you got those big white teeth.
It's been nice today. It's meant to be hotter tomorrow as well, I think.
It's supposed to be good weather all week.
Beautiful today, yeah.
Yeah, so makes a change. But anyway, right. Let's. Do you want to just give a bit of background each? I think most people obviously know who I am and what I do, and then from what you say, they might be able to then ask you some questions. I'd imagine. Theo, do you want to start first, or?
Yeah. So hi guys, I'm Theo Al-Ali, and I'm a property investor, and I'm based in the northeast. So I'm based in Teesside. My portfolio consists of single buy-to-lets and HMOs. I bought my first property back in 2013. And yeah, just been growing the portfolio ever since. I'm also an accomplished engineering and construction project manager, and me and myself and Dave have formed a project management company as well that operate in the northeast, and we're currently involved in refurbing a commercial conversion from offices to a block of apartments. So if there's any questions or anything I can help with, feel free to reach out to me, guys. I'm easily accessible via Facebook or Instagram.
And you've recently been on the TED Talks podcast.
Yeah, I've been on a couple of podcasts. Been on the TED Talks podcast and J2 Hub by James Sahota. Right. Yeah. So if you fancy a listen, it's a decent episode.
You say so yourself.
No, all good stuff. Davey?
Yeah, been investing in property for 15 years. Started off doing flips. Got a background of being a construction project manager, doing some big multi-million pound developments in Birmingham and London. And yeah, got a portfolio of many single lets. Dipped my toe in the SA world and currently doing a commercial conversion with Theo in Darlington. And yeah, just gradually increasing the size of the portfolio as we go, and yeah, been quite successful so far.
Happy days. When did you both make the decision to move into full time?
So I only moved into property full time back in August last year. I was an engineer and project manager before that, and it wasn't the fact that I didn't like my job that made me go into property full time. It's the fact that I just didn't like the constraints of being employed. So I didn't like being told what to do. Didn't like having to be on site for a certain time, leave at a certain time. I didn't like the cap on my salary, and that's what sort of made me. That's what made me go in a property full time.
Yeah.
And yeah, and it was getting to the point where property was demanding more time than I could give it whilst being in a full time job. So it was a perfect opportunity to sort of to go into it with yeah.
Did you? Because I get this question all the time. So, did you wait until your income was matched off your property income, or did you wait a bit longer?
No, so I waited until it matched my income from my employment, and then I jumped over. Well, it was slightly less. It was slightly less than what I'd earned as a salary, but I knew that in a few weeks' time, I had a HMO. I had a 6-bedroom HMO that was due to complete. And then once that got rented out, it was gonna be a lot more than what I earned in employment.
And what have you found the main differences?
In what way? In between being employed and being in property?
Like the progression of your property portfolio and everything since you've been able to do it like full time.
Yeah, I mean before it was very, very time intensive. I mean, I was working 8 till 4, 8 till 5 every day. And then going home and working evenings and weekends. So it was a very tough work-life balance. Whereas now, I can concentrate a lot more time on just property, and then still have that work-life balance on the evenings and weekends. And it's helped me form better relationships. I feel especially with estate agents and other key people in my network, because I'm not just meeting them on evenings and weekends. I'm going into the estate agent's office during the day. I'm making calls during the day, and I'm not just a part-time investor.
Yeah.
And then people start taking you a little bit more seriously then as well when they know that's all you do.
Fair enough. Davey?
Yeah, I gradually when I came back from Australia 3 years ago. I was in Australia for a long time. I came back from Australia 3 years ago. Worked full time for about a year, then knocked it down to 3 days a week as my cash flow increased from my property portfolio. Quite openly, I had a cash flow aim of £3,500 a month before I quit my job. I hit that and quit my job and I've slowly increased it ever since. So yeah, I've been full time for about 6 months now, and yeah, I just echo what Theo said. It's you find yourself working all hours of the day, as I'm sure you do, Ryan. But it's not work. It's your passion, and to dedicate 7 days a week to your passion is an absolute privilege, and I feel blessed to be able to do that. That was always my aim with property. Property creates freedom, and I think that's why most people get into property. And yeah. It's living the life I've always wanted, to be fair.
Yeah. Most people do have that sort of 2.5 to 3 grand sort of. That seems to be the number, isn't it, to get people out of their jobs, and then they kick on thereafter, and then goes to 5 grand, then to 10 grand, and so on and so forth. So, right, let's get some questions. Yeah. That's not really a question. How do you handle the vendors who respond to your advert, who want top dollar for their property, I thought responding to them by an ad, they're motivated, but all I'm seeing is a lot of pushback. Theo, you've been doing some adverts. What do you think?
Yeah, I mean, I've been recently doing some direct to vendor marketing. Yeah, I mean, with vendors having unrealistic expectations for their property, you've just got to you've got to explain it to them really, and just break down the numbers and see and explain where you're coming from, and explain that what they're demanding is way out of reach, especially given the current market conditions. But yeah, I mean, you've got some deals where there's a bit of room to negotiate and you can maybe close a deal, but there's some deals where the gap's too wide and you've just got to walk away from these deals. Maybe follow them up in a couple of months' time. But yeah, you've got to be prepared to walk away from deals and not get too hung up by them.
I think everyone's different. So, like, if we're talking buy, refurbish, refinance, do you have certain parameters? Money left in, or how do you work yours out?
So ideally for me, when I'm doing buy, refurbish, refinance, I like to have like an 18-month payback. Right. So on the funds that are left in, an 18-month payback, and that seems to be working. That seems to be working well. But if the property's in like an A1 location, I might go a little bit more. But that's my rule of thumb roughly.
How do you do it, Dave?
Yeah, with single lets, I use buy, refurbish, refinance as we all do. My strategy, if it any more than 5k in the deal, I won't go for it. I've had a number of deals where I've been lucky enough to get all the cash out, but you know I'm not hell bent on that. If there's a few grand left in the deal, it cash flows every month, then why not? It's
cash flow. To be honest. Cash flow do you aim for?
Sorry, mate, you broke up there.
What cash flow do you aim for per month net?
I generally aim for once I've refinanced 350 on a single let minimum, absolute minimum. I achieve over 400 in a lot of them, but yeah, minimum of 350 once I've refinanced to take my cash back out. Yeah,
Theo, you're fairly similar, I'd imagine.
Mine's probably slightly less. I'll probably go for about 300 per month on single lets. But then again, the properties that I buy are slightly less of a value than Dave's, so it just swings and roundabouts.
Right, we've got some more questions. How are you sourcing deals? Is your mainstream estate agents your main supply? Either of you, Theo?
Yes.
Sorry, Theo.
Go on, Dave.
So I was going to say, my mainstream is estate agents. I've had I've built a relationship with estate agents for over a decade now, and I've done very, very little direct to vendor. I've got we buy houses and my details on my vehicle, but apart from that, I've just built a relationship over the years with estate agents, and I can't fault them. I don't need particularly to go direct to vendor because the yield I get from estate agents is absolutely fantastic. I mean, I get stuff before it goes on the market, so no real desire to.
How much do you get off your van advertising?
Oh, I've had absolutely zero response off it.
At least you're honest. Your van looks nice.
that was the main aim, to be fair, mate.
It's just creating brand awareness, isn't it?
I was going to say, all you need is one deal off it and your stickers are paid for, so.
Well, there you go. It's very little cost, to be honest. And I've had one call off a guy that wanted above market value for his property, and we had a bit of a laugh about it over the phone, and we haven't spoken since. So, but yeah, it's one deal. If you get one below market value deal, yeah, like you say, Ryan, it's more than paid for your costs anyway.
What about you, Theo? How are you sourcing most of your stuff?
Yeah, so mainly similar to Dave. Mainly, most of mine come from estate agents. Built a great relationship with them over the years to the point where they call me before it even goes on the market. But however, lately, especially since the coronavirus lockdown and whatnot, I've been trying to expand a little bit more into direct to vendor marketing. So just because you shouldn't put all the eggs in one basket, should you? I mean, it's good to have a spread. I mean, recently I've been dropping out I dropped 5,000 leaflets last month, and got a few inquiries, but nothing's come to fruition yet. But again, it's just you got to keep repeating it. And I mean, on average, they say a customer needs to have 7 different touch points before they'll buy from you. So it's just creating that brand awareness, really.
Yeah. Yeah, just getting out there. It's the same with. I think that's the same with your Facebook marketing or whatever. They might not click the first time, but if you use good retargeting, then you get them back in front of the right people. So it brings obviously your cost per click down. So
Yeah.
what are your thoughts on working with estate agents to secure HMOs? And I'd imagine that's a kind of a rent-to-rent style question. I think a lot of people tend to struggle to get through to estate agents on rent-to-rent because most estate agents manage them, so they probably don't want to give up that income, really.
Mm.
Yeah.
I don't.
I think a lot of I think that approach.
Yeah.
No.
No, I've got no experience with rent-to-rent.
Yeah, fair enough. Let's have a look at some more questions. What percentage of your properties come from estate agents? I think pretty much asked that, haven't we? How long did it take to hit your cash flow target? So I'd assume that's sort of getting out your property and getting out your job, I'd assume, isn't it? Target.
Yeah, for me, it took me about just under 2 years to reach £3,000 a month.
Fair enough. Dave, you said 6 months, was it?
It took me longer than that to get to where I need to be cash flow wise. I've been full time in property for 6 months, but I'd say about 2.5 years to get from 0 to 3,500 a month, and that involved flips and BRR, to be honest.
Fair enough. Have you had any disasters?
Disaster? I don't think I've had disasters, touch wood. Have you had disasters, Dave?
I think when you speak about disasters, it depends what you mean. I've had disastrous tenants. I think the whole purchase and refinancing process, no, it's been absolutely smooth sailing. I think once you've got absolutely solid knowledge in your numbers, and you don't deviate from those numbers, then I think you're going to be disaster free regardless. Disaster tenants, yes, of course, there's a human element there, so you can do all the vetting you want. I've got a letting agency myself, Orange Lettings, and you can do all the vetting and everything you want to, but you still, there's a human element. You're taking a risk on a human moving into your house. But no, the whole property process, no disasters whatsoever.
What leeway on your buy, refurbish, refinance calculations? What leeways do you give yourselves for, I guess, the uplifted value and the refurb value?
So refurb value, I always put a minimum 15% contingency on the refurb, and then on the reval, I'll probably say again probably about 10-15% either way.
Downside, yeah.
Yeah, I'd say the same. 10% either way for me.
Yeah.
That seems to cover it.
Yeah, and obviously if it comes in less, than happy days, right? So
yeah.
Yeah.
What do you guys offer which could complement my refurbishment team? We specialize in refurbishments, home improvements, and need support in building a team. You guys you've got like your own little building team going on, haven't you? So your own refurbishment team. How have you pulled that together over time?
So yeah, it's just from so in terms of getting our team together, it's just from experience and building relationships over time. I mean, you work with a lot of tradesmen where they say one thing and then do something completely different, and you've got to kiss a lot of frogs to get your good core team together. And then whenever we're looking for new tradesmen, if our tradesmen aren't available for any reason, we always go through recommendations from other property investors who can vouch for them, and then if we can do, we'll try and inspect their previous work and whatnot, and that seems to give us a good indication.
Yeah, I do that. I was actually on a court hearing call yesterday from a tradesman that shafted us in December, and even though he came recommended from a landlord that I do a fair bit of work with, he's worked with them for 5-6 years. He was just an absolute disaster on my side of things. I think there's a lot of personal problems in the mix, but at the same time, he wasn't big enough he wasn't as big as he said he was. So, as you say there, I think even if you get a recommendation, it's still always important to probably check their work out and check who they've actually got.
I mean, everyone has different standards, don't they? If one investor tells you that you've got a superb plaster, that's a superb plaster by his standards. He might turn up on your job and you're like, what the type of thing. Yeah, everyone has different levels. I've been lucky enough to have the same building team for 15 years now. Even when I was living in Australia, I was still refurbing houses in the UK. And that was down to my relationship with my build team. I had 100% trust in them. I'm very lucky. There's very little project management in the refurbs from my side because the relationship I've got with my builder, I just leave them to it. I know the final product is going to be where I need it to be.
Yeah, I think once you've spun them through a few houses and they kind of understand, what look you go for, what decisions you would make. Do you want to leave this? Do you want to repair that? Whatever it might be. As you say, I'm probably in a similar position now with you, Dave, where I just almost like give them a lockbox so they can drill the key on the front door and let them crack on with it.
Exactly.
And I don't even really need to go around or check, and I just get the final photographs once it's finished, So, which is great because then you can just concentrate on acquiring more and more property rather than getting involved in the running around.
You can channel your time into growing your business, for sure.
Sure. Cool. I'm currently trying to educate myself as much as possible in this fascinating industry. What are your most valuable unforeseen learnings so far? Theo, I'll let you go first.
What was that? The most valuable unforeseen learning?
Just what's your most valuable thing, I guess, you've learned from property so far, or your journey?
Yeah, so when I first started, and I think this will be relatable to quite a few people, it was you're over-analysing deals. So a lot of people tend to procrastinate, and I've done this at the beginning as well, procrastinating and sort of looking for that perfect property deal. And that perfect deal doesn't exist. It's better to get started. It's better to get started on something sort of decent than something that's your dream property. Because the time that you're going to waste for finding that perfect property, you could have bought a lot more in that time. Yeah. So by all means, obviously do your due diligence, but just don't sort of over-analyse deals because there's no such thing as a perfect property.
Yeah, no, I'd agree with that. Dave?
Yeah, I think for me, educate yourself. Education is everything. You wouldn't drive down the A1 if you hadn't had a driving lesson. So why would you think that you can get in the property world and just nail it without the right education behind you? Yeah, education is everything. Be it courses, be it books, and then second to that would be start as early as you can. Get out there, make the mistakes. With the right education behind you, your mistakes shouldn't be too costly anyway. But there are things you can learn on site and off site, the finance process, etc. And don't wait to buy real estate. Buy real estate and wait is the old saying. And couldn't be any clearer than that. To get in as early as you can. Yeah.
I think for me, it's probably when I was starting the BRR game, I'd always wait until the money actually came back in my bank account before I went looking for more property. Mm-hmm. Whereas, I wish I'd just continued sourcing, and then you'd either find the money somewhere, or you'd probably sell the deal on. Or I just think I'd have been so much further ahead in that initial stage if I hadn't waited till the money hit my bank account. You don't have to pay it out until you're right near the end of the completion stage anyway. So that was probably my biggest mistake, and I think
confidence as you go along.
Yeah, and I think once you get used to how the process works, you know that technically if you haven't got the money in your bank account, you can stall a few weeks and stuff like that as well, to make it happen. The vendors aren't really going to disappear after they've had the house off the market for sort of 2 months or whatever it might be. So yeah, for me, I think it was definitely that. I do think it could have moved a lot quicker. But again, that just comes down to it's experience, isn't it? And it's knowing how the system works and trusting that you're going to get that money back in your bank account to go again. And
yeah, it comes to confidence, doesn't it? I mean, it comes down to confidence and experience.
yeah, I think that's in anything, even if you're looking at sort of, your rent-to-rent strategies or your lease options or whatever it might be. I think for me, getting the first property was the hardest for sure. And then probably the first 5. But then after that, it seems to just it's quite easy, isn't it? Because your confidence is sky high. Yeah, and you just know what you're doing. And then I think things start to come out to you as well. As you say, you get friendly with the estate agents and they start to bring stuff to you and you're not having to do all the hours scroll and right move anymore and all that sort of stuff. So,
very much.
But have you ever done any assisted sales or options to purchase? Are these creative options in doing deals and not having to start with a bigger pot? I know I have. I've got quite a few lease options on the go and in the portfolio. I do think it's a good strategy. I do also get involved heavily with the sort of rent to rent and stuff. Have you guys got any lease options or?
No, I haven't.
No.
Just straightforward BRR for me.
Too much money.
Yeah, I'm very traditional in my investing ways. I'm very. I think lease options are great. I understand them. I think if you can get all of them, then brilliant. But I've done the hard yards in the early days, and that means that I do prefer to purchase property.
Yeah.
Very old school in my ways. Different. We've got service accommodation, BRR, flips, or whatever. But old school approach to all of those methods.
Yeah, I think I was definitely I was BRR all day long, and I still am. But I think I acquired quite a few through sort of the rental strategy and sort of, you're making them pay, your £400 a month that we were talking about before as your kind of minimum expectation. You were getting that from the rental strategy. So I just thought, well, this is a quick way to really enhance the cash flow and then obviously reinvest it into buying more property. But I think as time definitely goes on, you do want to sort of de-risk yourself slightly away from the guaranteed rents and especially like now where I have had some properties where I've paid rents on them the last couple of months and they've been empty, especially on the service accommodation side. So there is that risk always of having a portfolio. Plus, that landlord could at any point say he wants his property back and your business could shut down overnight if that happened on the mall. So but I do quite like the balance of it all. I think it is a good way. And if you haven't got funds at the upfront, then I do think you can get started quite quickly doing lease options and rent to rent to get that experience.
I think it'd be a solid. At our stage now, it'd still be a solid addition to our portfolios to increase the cash flow. I'm not against it whatsoever. I'm just a little bit stuck in my ways, I guess. And if something's not broken, don't fix it, type of thing. But I see the value in rent to rent and lease options for sure, 100%.
Yeah, I mean, I see the value in lease options. I think they're a great strategy, especially if you understand them and know how to use them. Because I think the prime time for lease options it'll be in a recession, and obviously we're going into a recession now, so I think there'll be some cracking opportunities for lease options in the next coming months.
Yeah, when the VAs are picking out the data, if I was to show you our data sheets for the lease option mailers we send out, nearly every single one that we then highlight was bought in 2007. So that they're nearly all the ones that work for lease options when we're sending the letters out are around that 2007 mark, which was obviously the last time, I guess, the financial market went tits up. But I don't think it's going to be as bad as everyone says. I mean, I don't know what your thoughts are, but I think the government have pumped a lot of money into the economy, saved a lot of jobs. These business bounce back loans are going to keep. Some companies are getting these 50 grand loans. They've never had 50 grand in their bank account before, and that's allowing them to buy property and kick on. And I just can't see it, me. But obviously, a lot of people are saying it's going to be like Armageddon. But
yeah. I'm similar to you, Ryan. I think I don't think it's going to be anywhere near as bad. I think it's going to be a short, sharp recession. It is a little bit worrying how accessible these 50 grand bounce back loans have been. One of my tenants, he's a self-employed scaffolder, and he's got one. I mean, he's never had 5 grand in his bank, never mind 50, and he's been given a 50 grand bounce back loan. So that does make me feel a little uneasy. But looking at the bigger picture, I think the government have been pretty proactive with with the means of improving the economy. And I think it'll create a pretty sharp recovery.
Yeah, I have heard that. I mean, mind you, I spoke to my broker and he hadn't heard it, but people were saying you can't use it to buy property, but or deposits for property. But my broker said he hadn't heard that.
Yeah, I mean, from what I've heard, there's quite a few lenders that don't mind using bounce back loans as deposits, whereas some are a little bit more stricter than others. But then again, the purpose of a bounce back loan is to use it for business purposes and to enhance your business. But if your business is solely just property, then why can't you use it to buy property?
Yeah, I think I had a good chat with him. He was, I think where it might be for people that haven't actually got a property business up and running yet, and they've managed to get the loan, and then they're buying their first one with it. You know, whereas I think the established companies, it's just, as you say, it's just to support the business and kick it forward again. So I think they'll still just look at your credibility and your P&L and everything else that goes with it. So I don't think it'd be too.
My broker seemed to think that it was perfectly fine to use them as deposits after the 12-month period when the repayments start. Obviously, that will be accounted for in your cash flow, in your projected cash flow. So will it then affect obviously your lendability? But in its purity, a bounce back loan can be used as a deposit according to him. So.
Yeah, I was thinking it at first. I was like, "Oh, I'm just going to keep this for 12 months and then pay it back, obviously interest free." But really thinking about it, you know, the amount of bridging that I do, it's cheap money to just borrow for the next 6 years.
Yeah, 2.5%. You can't go wrong, especially if you're using that to make more money. It's a no-brainer because, I mean, bridging loans, what they're charging on average 1% a month, and if you can use this as a bridge, then it's a no-brainer, isn't it?
Yeah, no, I mean, at first I was just a bit short-sighted and it's like, oh, I'll just use it 0% and then give it back. But then you think about it and you're like, well, I could just keep recycling that money for the next 6 years and just pay the monthly payment on it when it kicks in.
Exactly.
Yeah, I was the same. I mean, before this coronavirus hit, if an investor had come to you and said, look, I'll give you some money I'll give you 50 grand for 2.5% a year, you'd have snapped his hand off, wouldn't you?
Yeah, exactly. Yeah, I think that I have heard the stories of, you know, people going out buying Range Rovers with it and stuff like that, which is just...
Yeah, it's just stupid, isn't it? Because it's obviously it's a depreciating asset, so you're not gonna, you want to use it wisely, and you want to use it to make more money, not lose your money, because eventually you've got to pay this money back.
Yeah. Right, let's sorry, this Mark, have you guys ever done hold on, this is a follow-up to his original question. All right, so in terms of a team, he means investors, JVs, deal sources, others guys such as good solicitors. I already have a great set of tradesmen. David's Mark here at the property team.
Hey Mark, how are you doing?
So
I've been speaking to Mark this week regarding refurbs and just talking shop a little bit about property. But yeah, I've heard he's got a very good reputation.
Fair enough. So I think in terms of JVs, deal sources, other guys, I personally am not a massive fan of deal sources. I don't mind the investor deal sources because I do understand that people might not have 30, 40 grand to put into deals. But the rent-to-rent ones, I just think, you know, if it's no money down, a little money down, then why aren't you taking the deal on? And the numbers never seem to stack up. I don't know whether... But even, I think the investment side of ones, sometimes the fees for me just seem to kill the deal. I don't know how you guys, you know, when you see them, but...
So, I mean, I was sent a deal this week, like literally 2 days ago, and it was a property that the thing with lacking in deal sources is actual proper due diligence and research and crunching the numbers, because they give you the headline figures and you think, wow, that's an amazing deal if I want to buy it, and then you start asking them for the details and the info, then you do your own research and you think the numbers are way out. I mean, this deal, I'll give you an example. It was a 2-bed apartment for £140,000, right? And it was £10,000 refurb, and then it was going to be worth £230,000 after you spent 10 grand on it. I'm like, wow, that's an amazing deal. That started digging in, done my own research, and the apartment wasn't worth any more than 150 when it was done up.
Yeah.
So, and the guy showed me, he sent me some comparables, but they weren't comparables, actual sold comparables. They were like on the market comparables, if you know what I mean. So you can list a property up for whatever price you want. Doesn't mean it's going to sell for that. But until it's actually sold and registered on the land registry, that's when I take it as a comparable.
I think valuers now are only taking the last 6 months, aren't they? And then it's, you know,
0.2 mile, yeah. So
yeah. So
yeah, I'm yet to find a good deal sourcer that a lot of them they take the fees out there. It looks like an okay deal, but then you've got £5,000 fees on the end of it. You're like, well, that's obviously part of the deal. Some even omit the stamp duty. You're like, I'm pretty sure I'm going to have to pay stamp duty. They do anything they can to create this headline deal to pull you in, but I'm yet to see. I mean, I've probably been sent over 100 deals over the last couple of years, and not one of them has stacked up to be worthwhile buying. And yeah, I mean, if you're a sourcer and you understand the property business, and if you find a deal, you're going to leave less than £5,000 in the deal, I'm sure you can get the cash to buy it. I'm sure you can. So why would you be selling it on?
yeah, it's a tough game, the deal sourcing game, I think, you know, because as you say, by the time you add your fees on, especially, you know, these 50, 60 grand flats, and then they're wanting like £5,000, so that's 10% of the value of the house, you know, or the flat, exactly. Whatever, and it just doesn't stack up.
And they've got it on Rightmove. I don't know. Yeah,
fair enough. But so in terms of your question, Mark, stay away from deal sources. Find your own deals. There's plenty of deals out there, and you can find them yourselves. I think good solicitors. For me, I've worked with the same solicitor since I started, and you just kind of build that relationship, don't you? And then you can kind of start tweaking the fees and things like that as you start putting more work with them. I've only really had the one solicitor, so I can't really comment. I don't know whether you guys have been through it. Actually, sorry, I tell a lie. I did go elsewhere once and it backfired, so I had to, but that's a different story altogether. But yeah, so I've kind of had the one really, and I think the consistency, a bit like the trades teams, a bit like everything, it just pays off.
Yeah, I mean, I'm exactly the same. I've had my solicitor for the last 7 years, and I've only used the one. But the thing to take into consideration is your solicitor is maybe specialising in residential conveyancing. Don't go to him with a commercial question, because it's out of his knowledge. So find somebody that is a specialist in that niche. Don't find it like a generalist.
Yeah. So you're talking about when you're obviously doing this development work that you're on now, you're having to change for your solicitors and legals and stuff.
Yeah, I mean, so I wouldn't go to my solicitor with a commercial question. I would find somebody else for that. Especially lease options and stuff like that. It's mainly commercial solicitors that deal with that, rather than bog standard conveyances.
Yeah. Okay. Mark's saying that lease options seem good for me, although my financial advisor said no. I'm pretty sure my own solicitor would say no, simply because they haven't done them. That's why I want to build a team of these people. There's plenty of, I mean, I don't understand why a financial advisor would advise someone against earning more money. That probably doesn't stack up for me. I think the risk in lease options is it's more with the vendor than the actual purchaser, depending on how much refurb you're going to put in, I guess. But if it's very little money in, you know, you're only taking the option to buy it, so you don't actually have to fully commit to it at the end. So it's a bit like a test drive on the property, as far as I see it. And I think don't get me wrong, there are some solicitors that won't touch them, but I know we've got them in that Northeast group. There's plenty in there that do lease options. I know whenever people fire the questions in, they seem to get quite a few recommendations for writing lease option agreements. So again, it's just about finding the right people that specialize in the right thing, isn't it? So
yeah.
Let's see what we've got. Why would an estate agent contact you first? You both get your you both look to get most of your money out of the deal. So I am assuming your offer is significantly below what the vendor is expecting. Why would they come to you instead of trying it on the market for a higher rate?
Because, mate, the vendor might want a quick sale. The vendor might want a certainty, because if you think about it, one in 3 sales actually fall through.
Yeah.
So they could sell the property twice and both of them fall through, and then on the third one it might actually go through. So to get certainty, that's why the estate agent would ring us, because they get speed, they get an instant decision there within a matter of 24 hours whether we're going to buy it or not, and they know roughly what we would pay for the property, so they wouldn't come to us with a property that's overpriced or a property that's done up immaculately that needs no work doing to it. I mean, the estate agent knows your requirements, so they wouldn't waste their time or your time or the vendor's time in that instance. So they only come to you with deals that they know that they can push your way.
I think the agents are quite clever now, because they advertise the refurb deals, don't they, with like, you know, the floorboards shown on the first photograph now, rather than, you know, the nice kitchens and the done up sort of side of things. I think they're quite clever at how they position things on Rightmove now.
Yeah.
So, but yeah, as you say, if the estate agent's doing their job properly, they should be advising the vendor that they can't get market value for the property because of the state that it's in, and therefore it does attract the likes of us, and that's why they come to us.
Yeah, I think just reiterating what Theo was saying, I think for agents, it's the certainty of the sale going through, but mainly I think it's the speed. You know, I've completed on single lets within 20 days, and it would have been a lot quicker than that had it not been for solicitors. So yeah, it's the speed. It's if I buy a lot in cash, or I use bridging finance as well. So yeah, it's a speed and a certainty. It's a dead cert.
Do you renegotiate after valuation?
No, I mean, I'll be honest with you, I barely get valuations, because most of my deals are funded either by cash or bridging. So I barely get valuations.
Valuations generally.
Yeah.
Yeah. And to be honest, I'm one of these people where if I give somebody my word, that is my bond, and I won't go back and try and renegotiate, because I think that loses your credibility, especially with the agents.
Yeah.
Unless if there's like a genuine reason why you need to renegotiate.
Yeah, like now, like I've just done 2, but I agreed it before COVID, so probably.
Yeah, so I mean, after COVID, exactly. So unless there's a genuine reason, and the market falls off the cliff like people are expecting it to, then I wouldn't renegotiate. But if there's something that's come to my attention sort of afterwards, then yeah, you'd need to, wouldn't you?
Yeah. Nick's asking if you use bridging loans for all your buy, refurbish, refinance deals.
Yeah, most of them, yeah.
Yeah. I think initially when you first start, sometimes you do it the wrong way and you do the mortgage sort of thing, don't you? But then you realise how long it actually takes to do that. I'm definitely moving more into the cash side of things now, and then onto the mortgage rather than bridging loans. But I still do think bridging's got a good place for a lot of stuff. It allows you to buy just as, like, you can buy 2 or 3 times, then obviously chucking all your cash into one, can't you? So, although I think the criteria is now like 65% loan to value is pretty much all that's kicking around at the minute, with sort of personal guarantees and debentures and things like that. So it is definitely a lot harder right now, but hopefully
it is. Yeah, I mean, I've upset a few mortgage companies over the years by using buy-to-let mortgages as cheap bridging, effectively.
Yeah,
I'm sure we all have. But you start upsetting people. It's not worth it. There's a limited amount of lenders, you know, offering loans for what we do. So it's not within your interest to be upsetting mortgage companies
as well. You know, it's like 8 months by the time you've done it and washed it all through, and you know, whereas bridging, I think you can do it in pretty much 3 months. You can have it all back out and back in your bank account, and you can go again. So you can buy like another 3 properties in the same time. And this is the argument I have a few times on Facebook, and people say like, well, bridging's expensive. Well, it is obviously more expensive, but at the same time, you can get more assets under your belt, which create more cash flow. You've got more equity built into properties. So really, it's not that expensive. It's probably cheaper.
Yeah.
Yeah,
You're not
exactly.
upsetting anyone. I don't think bridging's that expensive anyway. I think a lot of mortgage application fees and valuation fees are sky high, especially for limited company purchases. You know, if you're using certain bridging companies, the fees are relatively the same as a buy-to-let mortgage.
Yeah. Let's see what else we've got here. What do you offer training-wise, Ryan? So everything really. So lease options, rent-to-rent, rent-to-SA, buy, refurbish, refinance. And then I've got I think one thing that separates my course from the others is I am very, I don't want to big myself up, I'm quite good at marketing. So a lot of my program is got a lot of marketing content in there, and how to get direct to vendor, how to get leads through our Facebook ads, how to use chatbots and automations and systems and sort of put your business together to run on autopilot. So I think a lot of people get a lot of value out of the marketing side of things on the training program, which is either you can do one-to-one or there is just a video program that you can buy as well. Barry, on a 60 grand purchase, how much does the bridging cost in total, roughly? Then what you spend? I'm paying about 0.7% a month, something like that now on bridging. I think I'm on.
0.49 for a 6 month bridge.
Yeah.
Yeah. 0.8 for 0.8. I mean, I'm paying roughly for a 12-month bridge.
Yeah, 12
for a 12-month bridge, but that's with the thing is you've got to take into consideration all of the fees that comes with it. So you've got your monthly interest, which is, let's say, 1% a month. If you work your numbers based on 1% a month, then you've priced it in. So if you work on 1% a month, so if it's a £60,000 purchase, you're not going to get 60 grand. You're going to get realistically 45,000, maybe 75%. So 1% of that is 450 quid a month. But then you've got your arrangement fee. Arrangement fees on average are about 2% of the loan. So if you're borrowing 45,000, then your 2% is going to be £900. And then you've got some lenders have exit fees, some don't. So a typical exit fee might be 1% of the loan. But then you've also got to take into consideration the lender's legal fees, which on average is about between £800 and £1,000. And then you've got your survey fees as well, which can be anything really.
About 500 quid, aren't there? Something like that. No.
Yeah, it depends on the property location.
I've just paid £650 a day for a 5-bed HMO, which I didn't think was too bad really.
That's not bad for a 5-bed.
So it's a decent purchase value. So but I didn't think that was too bad. But yeah. Right, let's see. Any more questions? Right, I think that's about it. Beer or clock, as Mark says. Do you guys want to add anything or no? Actually, we have a question for Dave, don't we, Theo?
Yes, we do. Penguins.
What was it again? How is climate change affecting turtles?
Well, the turtle population worldwide has been reduced by 12.78% during the last 10 years, and a lot of this is to do with global warming. A lot of the shells are melting as they walk down the beach, and they're failing to survive. So, that's the main reason. I think we can all club together and try and help them out with.
Donate 6666. Right. Anyway, right. Thanks, gents. Appreciate your time. I'm sure everyone else has that's been watching. Thanks everyone for your questions, and we'll look to probably do another one next week. But yeah, thanks a lot, chaps. We'll be in touch.
Yeah, thanks for having us.
Take care, everyone. Cheers.
Thanks, guys. Cheers.